Futures are green with Europe leading the way overnight. The second quarter gets underway as traders try to determine the best course of action. Can this rally continue? I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So futures are higher this morning after stocks got off to a slow start on Monday, the first trading day of the second quarter of 2013. So, Scott, would you say this could be an indication that more mixed action is ahead?
Well, I think that the last few weeks we've had a lot of mixed action, and a slow start to the second quarter is welcomed or makes sense considering that everyone's saying we had a historic first quarter, that the S&P and all the major indices are up 10+%. So a little slow start so traders could figure out what's next, where they could position. It does make sense as we move into the second day of the second quarter.
So with stocks up this morning, what levels are you paying attention to in the S&P?
Well, if you look at the chart of the SPX, you will see that yesterday we were off a little bit, but we did hold higher. Okay, this is the gradual trend that traders have been looking at. The accelerated trend still intact. And then yesterday even we held the 8-day. Futures are up 7 handles or so. So, we could even be taking out 1570 today. But I think what had traders thinking a little bit bearish yesterday, not extreme bearish, was that the transports, which helped lead us higher, closed on the lows, took out actually Thursday's low. And then you also look at the Russell, which is supposedly the growth, which also helped lead us up, seemed to close on the lows, engulfing this entire upper range. So I think it'll be interesting to see how this up open is treated by the Russell and the transports, and that'll give us some clues whether or not we continue to the upside or maybe get some more weakness.
Right, and it does seem like both longs and shorts are working in this environment. There's money to be made on both ends, and one of the stocks that looks like it could be technically breaking down right now is Whole Foods.
Yeah, Whole Foods looks like it didn't participate in the rally, and if you look at the chart here, you will see that after a big gap lower and holding the bottom end of the range, yesterday was weak, it's coming into some big support. So if you want to look for something to short, you might as well look at something that technically looks poor, and right now a move below 83.70 could get you some more downside.
And of course, the banks have been lagging. They helped lead the rally earlier in the year, but now have been lagging. Looks like Morgan Stanley could be a possible stock that could provide cash flow for the shorts. Yeah,
if you're looking to short something, short the weakest one in a group that might have some more downside. Even though I do think the banks have more upside later this year, you can make some cute cash flow. And if you look here at Morgan Stanley, you will see that after breaking this accelerated uptrend right here and coming into support, it's now trying to break into that gap that started the year. So with the trend line being all the way down here at 20 and change, if the banks continue to weaken, this one should be the weakest one. So a move below yesterday's low of 21.52 could give you some more downside. So I would go to this one if you're looking to short a bank.
But then on the flip side, if you're looking to go long, some of those big multinational companies like Procter & Gamble still looking good.
Yeah, look at this stock. Look at the chart here, P and PG. That's why futures and markets continue to, go higher, because stocks like this that are heavily weighted continue to look good, and a move above, 77.85, it can continue. You look at something even like Coca-Cola, which has been really good, flagging higher, holding the 8-day. This thing starts getting above 40.70, and it can go. And then also in retail, Walmart continues to, after we had that buyable strategy around 72-ish, continues to work its way higher with some of the retailers. So it's a bit of a mixed bag. You can pick and choose what you want to do.
Right, and interesting to note that Goldman Sachs actually just took Apple off its conviction buy list. Does that surprise you?
It doesn't surprise me, but I took it off my conviction buy list when it didn't hold the 50-day last week around 458. And if you talk about Apple, everyone's like, oh, why is everyone treating Apple like a trading vehicle versus an investment vehicle? You know why? Because ever since it broke 681 months ago, it hasn't shown the commitment for an investment vehicle. It's just been a trading vehicle. Guys are making money on the short side. There's also been some tradable bounces, but you have to measure them closely. You look at the chart real quickly here, and you will see right when it broke this area, we talked about this becoming a trading vehicle. Now look where we are. Okay, this was your last tradable move to the upside. Once it gave way of the 50-day right around this 456, you should have honored your stops, and now we're right back near the lows here. So watch this 419. If it doesn't hold 419, it could go a lot lower.
We'll be talking about all of this and more in the long version, so stay with us.
There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.